Hi, this is Jeffrey Cohen, Chicago Quantum, U.S. Advanced Computing Infrastructures Incorporated President. How are you today? We're here to talk about the markets. We're here to talk about how it's a risk-off day today. And, looking at the results as we're open a little while, maybe it doesn't look that way, but it is actually risk-off today. So it means look at, smaller portfolios, kind of riskier bets, and you'll have less money invested, but you'll have more likelihood of actually doing well. And so we're going to talk a little bit about it. The first thing I want to point out is Treasury yields are up significantly, and so normally that makes stocks go down. It also makes bonds go down. So it's interesting that rates going up, stocks are down today, bonds are down. But in general, the market looks like it's behaving a little bit more. And we survived Friday's quadruple witching hour, where I think I'd read somewhere like $4 trillion of notional value of options expired on Friday. So there's a lot of action. And, we're going to talk a little bit about it. And so, but the big thing to show you is the US dollar is trading a little higher. Long bonds are trading a little lower. The banks are looking good. Actually, these are the highest valuation banks from an analysis we did a month or two ago. And you can see most of them are trading higher today. And so, by the way, through Friday, we were short Cullen/Frost bankers, and we closed our position at 126.40. It continued to go down. I thought maybe we made a big mistake, but it's back up again. And so, you can't be greedy and try to get every last penny, but I felt like we rode it pretty well. And so we are out of Cullen/Frost. So we are now talking about banks just because we talk about banks, not because, we have any personal investments. Other than, of course, our passive investments, our hedge fund investments, things like that. Retirement investments that we don't actively manage. Those could have banking investments in them, but that's not on us. So let's talk about things. Let's talk about the money managers. I always look at the health of the market, and I look at the health of the money managers. And this is market cap weighted. So you see Morgan Stanley's down, Schwab's up, BlackRock, Blackstone, Goldman Sachs down. And you keep going through the list. The smaller investment houses are definitely lower, with the exception of the tiny two. Cannabis and tobacco. Tobacco looks strong. Cannabis looks very weak. I read today that Altria just voluntarily abrogated its rights under its warrants for Kronos Group. It still owns a whole bunch of Kronos Group, but it doesn't have the options anymore. So, crypto and miners. So the physical miners down, whether it's rock and other construction mining, copper mining, gold mining. I mean, steel is okay. Steel's not great today. And then you look at your Bitcoin and your crypto miners and your crypto sales organizations, and they're not looking too good either. B2B, B2C, we think of this as our business-to-business, business-to-consumer tech firms. And you can see they continue to fall. They fell last week. They're falling this week. This is a recession trade. What's interesting is that Verizon and T-Mobile. T-Mobile's a good recession trade because it tends to go after the lower end of the market. Verizon looks okay though. So, but in general, very weak. Large firms, very weak. So, retail. No one's really talking about a boom this Christmas, but it's mixed. Retail, market cap weighted. Smaller caps, really fallen. Semiconductors and chips, way down. Now this is your momentum play. This is your, I gotta have it. And the market goes up, these guys are screaming higher. But look at NVIDIA's down $2.90 a share. Broadcom is down 0.2%. Qualcomm, AMD, Applied Materials, Micron Technologies, they make the memory DRAM. it's just not a good day in chips. So if you were betting momentum, you're losing on momentum today. Truck and transport and logistics, pretty much down except for some trucking companies. So trucking and a truck manufacturer. So it's interesting. Coal's up. It's cold out. I don't know if you're in here in Chicago, but I think it was 12 degrees this morning. I think it's going to get pretty cold. A lot of snow Thursday and Friday. We don't use as much coal here in the Illinois basin, but Indiana, I mean, there's good coal companies out there. And so you can see coal's a little higher, right? Energy prices, coal prices. Now, the thing we think about with coal, just let me be real for a minute. Let's look at like a Hallador Energy. We were short Hallador Energy before the spot prices of coal went up so much. And so why would we do that? We were short coal because price of coal's going up. These guys closed all their mines except for like the cheapest surface mining. Well, as they start to open up the more expensive mines, it's not that they can't do it. They can. It takes time, takes capital, takes money, increases your cost per ton of coal. And so they signed a bunch of great new contracts at a higher price. I think it got up to $45 a ton. But I bet you the cost per ton is going to rise to at least $35. They may make $10 a ton, but if their costs spiral out of control with inflation and all that to 40, they lose money again. And so coal is an issue of finding the best use of your resource, the product you can sell, spot market, long-term contracts, energy producers. In Hallador's case, they actually took possession of a wouldn't be a megawatt, gigawatt. It was a gigawatt. I think I want to say it's the Marone plant by them. And so they've agreed they're going to supply it with coal, but actually the first big amount of coal that they had to sell, they didn't provide it to the electric utility that they own. They sold it on the spot market, and they're going to run your utility below capacity. So a lot of weird things going on right now. It's just, I find it interesting. Coal is in a very interesting space right now because the costs are going up, price is going up. It sure looks like oil or steel right now. Because if you're in oil or steel, right, you ride these waves of price goes up and down, supply and costs go up and down. As price goes down, cost has to go down, so you shut down capacity, higher end capacity, and all that. And so, interesting about coal. So, I'm not sure I'm a bull on coal, but at least I understand the story better. And so, like a Hallador Energy, very small. I think they paid off a third of their debt last quarter, but the cost goes up. So, what are you going to do? Oil and gas. So we look at oil and gas, and it's pretty much red across the board. I mean, there's an LP limited partnership that's a couple of LPs. They provide usually just money. It'd be like a pipeline or a fixed asset that you invest in, and you kind of ride the returns of the fixed asset. We see ExxonMobil's doing a little better. Marathon Petroleum. Then you got your drilling support companies. Halliburton is a little higher. FET is a little higher. Nabor. Just so interesting. It's mixed. So energy is mixed. APA, SMLP, which by the way we were invested in for years. We love SMLP. It's a great company. We watch it. And then your quantum computing companies. And then Quantum Computing Inc. just came out with some interesting news. By the way, this is surprising news. Quantum Computing Inc. launched a subscription service to an actual physical quantum computer that's photonic room temperature. And they're saying, yeah, we got it. Exclusive use. Subscription based. They can do 10,000 variables. That's nice. That's optimization. It's Cubo. That's what we do. And so it's interesting because the last time I saw this firm, I didn't know they were even looking at hardware. And so the fact that they have some hardware, I think that's pretty interesting. And it's surprising, that's all. Let's put it that way. It's surprising. But they're the only quantum firm that's looking up today. So you can see where the market is. If we look at FINRA, where's the market data for FINRA? That's what I was looking at yesterday. You know, you get your decliners above advancers on Friday. This is corporate bonds, corporate debentures. 2-to-1, new lows to new highs. Things are kind of settling down, right? Bonds are falling a little, which really doesn't surprise me, right? Companies are really struggling. And something happened. I'm going to show you how I know the companies are struggling. There was some insight from our model. So that was interesting, right? Things are starting to slow down. If we look at FinViz, I find it, this is what I want to show you. Nope, hang on. I am not going to be able to show you what I want to show you on FinViz, but that's okay. Pop out of that. So let's go to the run. Let's give you some exclusive information. Because right now, I don't even know really what's happening in the market. It just looks down to me. It looks kind of sad. Interest rates are higher. And we're not even moving much. S&P 500. Look at it over the 5 days. It's back to a steady decline. Look at it over a month, though, and you see it's a rise, a plateau. Almost looks a little bit like a head and shoulders with a fall, but you'd have to look at the volume to really get that. It's just interesting. Rise, fall. Rise on volume, fall. Rise, not really on volume though. And then the fall on volume. So, who knows? So let me tell you what I see. Well, the other thing that's always good is Koi Fin. I was going to leave this up for you while we were talking. If you look at the 1 month, you realize the markets have actually just really started dropping since early December. For the 5 days, it looks like it's a steady drop. So December's been a bit of a tough month. You can see that the stocks today are kind of flowing up and down, but lower lows. And you can see the industrials are flat. The S&P 500 is only down 0.4%. I want to show you the VIX for a minute, just against the S&P 500. And so the VIX has been falling pretty dramatically. And so it's not falling dramatically. It's falling a little. But I want to talk about this because this is what I thought I'd be talking to you about. So if we look at our up run and we look at our down run. First thing I want to show you on the down run, and I'm going to make this bigger because I know it's hard to see. So we'd made a change in our down run. We removed a bunch of pharma companies, biotech, drug discovery companies. It's hard to trade a Madrigal today. Well, see, it's MDRL. Crashed. And it is up like 300% today. Let's see if I can find it. Madrigal Pharmaceuticals, MDGL. I was just reading about this. It's fascinating. So here was a stock that just went sky high because they had some good results on one of their drug candidates. Went from $100, $60 to $212. That's a pretty fast jump. Hard to trade that on volatility. It's too much going on. So this is a down run. First thing I want to show you is that the S&P 500 variance is down to 2.3. So It had peaked at 2.4. I'm grabbing my pencil and paper because I think these things are actually pretty important just to write down, even if I throw away the paper afterwards. So the S&P volatility, price volatility, seems to have peaked at 2.4 times 10 to the negative 4, and you're now at 2.3 times 10 to the negative 4, where it's been for a little while. You have 731 stocks that lose money, are listed in the U.S. stock markets, pass our extensive data validation, and have a market cap of at least $100 million. Now, $100 million, thank you, Austin Powers and Dr. Evil, is not a lot of money for a market cap. But I think we went low to basically get all the good companies. So you have 731 firms. Now what's interesting is minimum volume that made our list had 125,000 shares traded. The maximum had about 95 million shares traded. The variance of these stocks is 7.8 times 10 to the negative 4. Now, it could be that some of the decline of the risk is due to removing the therapeutics, biotech, pharmaceutical companies. But actually, we've seen this dropping a little bit over time. So when you see risk falling, you see prices start to stabilize. The other thing I wanted to point out to you, I don't want to do it that way. I want to do it a different way. I just want to go to the list of all the firms that made it, because you don't really want to see the picks. That's not that interesting. If you wanted to see the picks, you'd probably buy a run. So what I'm going to do is I'm just going to show you the full set. See, a lot of companies I really haven't heard of, but then you see Bed Bath & Beyond. Okay, I didn't know they were losing money. Tupperware, we've seen that for a while. AMC, really no surprise. Snap, from Snapchat. But you're going to see some other firms in here that are more, you've heard of them. Groupon. I didn't know Groupon lost money. Why would they do that? Why would they have all these things where they lose money? I know my wife loves Groupon. She would say, Jeff, we're going to go to some event because 55 people said yes, and now it's $25 and it used to be $100. Okay, it's great. Great, honey. But Groupon. What else is losing money? There were some others that surprised me, I guess. So we're going to keep going. Maybe fewer companies losing money than I thought. Hang on. A lot of these there's no surprise, like truck makers. Wow. Robinhood Markets. So Robinhood loses money. That's interesting. I didn't think they lost money. I mean, Carvana, we know, loses money. Big Lots, I'm surprised. Discount retailers shouldn't be losing money. Red Robin Gourmet Burgers, RRGB. You would think a place that sells hamburgers would know how to make money. They make a lot of fries, too. Warner Brothers Discovery, yeah, I knew that. I know they were in trouble. They were the spin-off and the merger out of AT&T. So AT&T spun off Warner Brothers to Discovery. Discovery and Warner Brothers are now together. I knew they might have a tough first quarter, right? But it's hard to think they spun them off and now they're losing money. It's, I guess that's showbiz for you, right? You lose money, but you make it up on volume. Spirit Airlines loses money. That I'm not seeing. The flights are all full. I just flew on Spirit. It was all full. Rackspace Technology, RXT. That's a business-to-business tech firm There's no reason why they should be losing money. Roblox, RBLX. They sell software. It's a gaming platform. There's no disc sent. There's no product. You're just maintaining a platform, and you get kids to get their parents to give you money. But Roblox is losing money. I was a little surprised about that. Wix.com is losing money. That's so weird. Wix actually has bought the company. Wix is the company that gives us our website, and we pay a fair amount to Wix for our website, corporate website. And so again, surprised, but okay. TripAdvisor. Why would a travel agency lose money? All right, so there were some bigger ones in here, ones that really surprised me. So, Informatica, INFA. Informatica, I think, was a database company. It sold databases like Oracle. Why would they be losing money? Beyond Meat, BYND. Take a handful of grass and tell people it's steak. How do you lose money doing that? You don't have to raise the cows. You just get some grass or some leaves or something, and you make it into meat or some beans. Garbanzo bean meat. Some kind of meat. Beans. Grass. You'd think you can make money at that. That'd be like me. Hey, honey, I made some rice, and I put some fondant or some... what do you call that? What you put on a cake? Icing. I put icing on a big thing of rice, and I'm going to sell it as a cake. A no dairy, no wheat cake. It's just rice with some frosting on it. Looks nice. You cut it. You get the sticky rice from Japan. Yeah, I make a fortune. $50 cakes. It's just a little bit of rice and some frosting. All right. Well, they're losing money. What else we got? Some of these. Oh, Uber. I heard Uber loses a lot of money. Why would Uber lose money? It's a friggin' website, right? Like for drivers, and they get a percentage of every ride. I bet you Lyft is losing money too. Makes no sense to me. Come on, people. Uber is not making a profit. No idea. No idea. Baker Hughes. BKR. They must just owe a bunch of money, because Baker Hughes, I thought that was a good firm in the energy sector. Baker Hughes. Fluor Corporation, FLR. So when you see companies like this, now I know Carnival Cruise Lines, CCL, is losing money, because who wants to go on a cruise in the time of COVID? But Krispy Kreme, DNUT, DNUT. Why is Krispy Kreme losing money? It's like $2 a donut, or $1 a donut, and it's a little piece of dough that you boil. Maybe you put little sprinkles on it. Sugar, a lot of sugar. Maybe the cost of sugar went up. I don't know. Seems weird to me. Now Zillow, I can understand, because Zillow took a risk. Zillow started providing. They started investing in houses. But the core website of having you list a home for sale on Zillow, no way. Madison Square Garden is losing money. SABR Corp is losing money. What the hell? SABR is the reservation system. That technology is so old. There's no way. CHWY. CHWY loses money. They're the ones where if you have a pet, you can order food, pet food, to be shipped to you. Now, maybe they forgot, but when you ship a 40-pound bag of pet food, it can be pretty expensive. I got to tell you, I break my back all the time. I buy the pet food. I get the cat litter. I don't know if you heard the cat going by there. And it's like 120 pounds. Can you imagine if I just said to FedEx, Oh, why don't you ship it to me overnight? It's free. Just build CHWY. That'd be great. Doesn't make any sense to me. Now, Warby Parker. My mom has a pair of glasses from them. I just saw an advertisement for them. They make glasses, prescription glasses for you. But why are they losing money? That sounds like a great business. United Airlines. I guess I'm not surprised when an airline is losing money. But come on, flights are full. Splunk? SPLK? I don't even think they have any development for new products, right? Splunk is like an AI data analytics firm. All right, what else we got? Scott's Miracle-Gro, SMG. Why are they losing money? Everything's going up in price. I would think people would want to grow their own. Whether it's food, whether it's cannabis, whether it's just plants. We have a lot of SMG products at home. We get this stuff. It's like magic. It's a Miracle-Gro solution. You dilute it in water, and then you pour it in your plants. And for like a week or two, the plants pop. They get really green. They get really lush. They love it. It's like a miracle. So why aren't they making money? Oh my God, Perella Weinberg Partners, PWP is losing money. Man, they must have been the ones that shorted me the bank I made money on. It just keeps going on and on. GILT Satellite Networks, GILT. Now, that's for Xerox Holdings. I can kind of understand that. Palo Alto Networks is losing money. Come on, they need like Elon Musk to come in here and just start cleaning this shit up. American Airlines is losing money. But it gets worse. So you keep going through this. Now the company's Boeing is losing money. Well, I understand they had a 787 Dreamliner that crashed, and so they had to retest a lot of things. But Boeing is a major defense contractor. Why are they losing money? I have no idea. JetBlue Airways. I guess I can understand an airline. That's tough, right? Oh, Utz Brands, UTZ. No idea why they're losing money. They sell this huge container of like cheese puffs, which probably cost. By the way, they have the same size container at Dollar Tree for $1.25, but don't tell anyone. So you go to the grocery store and it's like $7.99. And I had a son that I used to love. He used to always point, buy that, buy that, buy that. I love those. $8, $1.25, $8. Utz. Why are they losing money? Stupid. Zscaler just made. That's where I knew I saw them. Zscaler just made some defense industry consortium for cyber criminal defense strategies, ZS, but they lose money. That's rough. That's rough. What else? Oh, Spotify loses money. Spot. Why are these companies losing money? You're not going to make any for Etsy. ETSY, the company that sells the overpriced artistic shit, is losing money. It's a website. It's eBay. Do you think eBay is losing money? Come on, Etsy. Why are you losing money? What else you got? And I just got ADT, the people that have the security service. They're losing money. So ADT has a lot of like remote tech products. Why would they be losing money? Dun & Bradstreet Holdings, D&B. Does anyone know how much D&B charges if you want to have control over your credit rating? D&B, losing money. No wonder why. They were calling me all the time. Jeff, I want you to upgrade your account and do all these things. And I'm like, why? If somebody wants to check my credit rating and lend me money, it's on them, not on me. You update my account. I got a pretty good credit rating. You handle it. So funny. DoorDash. That one I don't understand at all. People delivering food from McDonald's or Wendy's or whatever, right? And they get a cut. DoorDash is losing money. Baxter International, BAX. Why is Baxter International losing money? Who is listening to this crap and who is doing this? Why is Allstate losing money? ALL. Allstate just shut down its headquarters to go remote. I want to think about this. Allstate had this beautiful, I want to say it was like a mile campus. I drive by it all the time on 294. They're selling it, they're shutting it down, they're moving to like Arlington Heights or Rosemont or whatever, Roselle, somewhere. And they're like, yeah, we'll just move everyone to our data center. No problem. But why is Allstate losing money? Allstate's a big insurance company. That's like so weird to me. Baxter and Allstate. Now they're both Illinois firms, so maybe there's something going on there. RILY. RILY Financial is losing money. Wow. How do you lose money as RILY? You're basically a like an investment house for small caps. Your fees must be through the roof. You're covering the firms nobody covers. All right, fine. General Electric. General Electric is losing money. Why? AL. Air Lease Corp. Maybe I can see that one coming. Cardinal Health. Cardinal Health Systems. Losing money. All right, AES, a utility out of Washington. I thought it was a regulated utility. How do you lose money with a regulated like 12% return? Maybe it's because you're doing some risky stuff outside the country. I didn't say that. I don't know if that's true. RCI, Rogers Communication. I want to say they're out of Canada or somewhere up north. So you have Redfin, I can understand. Yellow Corporation, I actually understand why they're losing money. Their credit, their margins are like 1%. Yellow Corporation has all the trucking depots, and they do truck maintenance, and they have the systems. It's not a great business. The yellow trucks, right? But it's an important business. So Yellow Trucks is losing money. We're getting close to the bottom, by the way. If you stuck around with me this long, KKR, Kohlberg, Kravitz, and we're gonna rip you off. KKR, the take them private, suck all the money out, and then send them public again. I love KKR. You know, there were books and movies written about them, and they're like the toughest people. Here, they're paying a 1% dividend, and they're losing money. It's great. Ares Management, ARES, another group of people that were supposed to be the smartest people in the room. Managing money. Losing money. DocuSign. How could DocuSign lose money? DocuSign is the company that for like probably $100, you get to sign contracts electronically. So all they do is they make sure that your signature is sent over and accepted as a good signature. Electronic signatures. Why isn't that like a function in Microsoft Word? But it isn't. It's a company. It's a company that does not pay a dividend and is losing money. Trade Desk, TTD. There's no way Trade Desk loses money. Trade Desk does the advertisements. So when you go to some stupid ass website, all right, let's try it. Let's go to CNN. Breaking news, CNN. Of course, now there's not going to be any advertisements. Let's see. Okay, that they must have known I was coming. Okay. Let's not do CNN. Let's try, who's a good advertising funded firm? Yahoo. Yahoo Finance. Oh, right up top. Go back. Right up at the top. They're going to give you an ad in about 10 seconds. There it is. You see ad choices right there and you click on it. This is something that the Trade Desk does. And if you go to Yahoo Finance, I was hoping to see Trade Desk pop up and say, we're providing you, advertisements that are meaningful to you. They must know. I don't know how they know. Somebody knows something here, right? So they are selling ads. trade desk is selling ads. It's actually placing ads between buyer and seller. So that should be a good company. They should be making money. Wayfair. You know, they called me about a job once. They were looking to hire a bunch of people, smart people, to help them grow. And Wayfair does, you know, the online retail, but they also do some other alternative types of businesses. Finally, Marathon Digital Holdings. They basically make Bitcoin out of thin air and sell them. Well, you would think you wouldn't be in the business of making Bitcoin and selling them if you couldn't actually make a profit doing it. But Mara has figured out how to do it. By the way, I made a video which I deleted about a year ago about Mara where I did an analysis and it told me never invest in this company because they had this beautiful data center in Oregon that they had spent years getting to be a very large data center, very energy efficient, cost contained, a good data center. And so we're going to shut it down because we're going zero carbon. So we're only going to have data centers that are powered by like switchgrass or little kids on bicycles. We're not going to use coal, natural gas, nuclear, whatever. We're going to use biodegradable plastic cups to make our energy. And so guess what? My guess is they haven't made so many Bitcoin because the energy is really expensive. And now you can't afford it. The data center in Oregon, you can afford it. Cheap power. When they first started, they had a great technical staff, infrastructure. You know, we're advanced infrastructure, our firm. So I get it. So I'm going to just run you through some of these companies because it's so surprising. The companies that lost money filled up 3 columns. Robinhood, Red Robin, Gourmet Burgers, Warner Brothers, Save, which is a Spirit Airlines, Rackspace, Roblox, Wix, TripAdvisor. Forgot who they were. Beyond Meat, Uber, Baker Hughes. Oh, Informatica, Baker Hughes, Floor. Carnival Cruise Lines, Krispy Kreme, Zillow, Madison Square Garden Entertainment, Sabre, CHWY, Warburg Parker, United Airlines, Splunk, Scott's Miracle-Gro, all money losers. Why? This stuff's a miracle. It helps your plants grow. Oh, Perella Wasserstein. Wasserstein and Perella. That's unbelievable. GILT. I forgot who they were. Shoot. Xerox. Palo Alto Networks. American Airlines. Boeing. JetBlue. UTS. Zscaler. Spotify. Etsy. ADT. Dun & Bradstreet. DoorDash. Baxter. Allstate. BYND. General Electric. Forgot who AL is. Oh, Cardinal Healthcare. AES, the utility. Rogers Communication. Yellow Corporation. Kohlberg, Kravitz, and Ripoff. Ares. Ares Management. Money Managers. DocuSign. The Trade Desk. Wayfair, and Mara. So, why? Why are they losing money? Why can't they make a profit? Oh, that was Air Lease Corp. So I would assert part of it is maybe they lost focus. You could argue it's inflation. You know, prices went up. Costs go up 10%. Prices didn't go up, or maybe they don't have the ability to raise prices. But in some of these cases, it could just be they owe too much money. My guess is if I were to look at these companies and look at the debt of these companies, you know the airlines have a lot of debt. Come on, forget about it. I bet you Uber, Wix, some of these e-commerce companies, they're all e-commerce companies now, tech companies, have a lot of debt. But then I look at kind of old school companies like Xerox, Palo Alto Networks, ADT, and those Yellow Corporation, And I think for some of these, it's just, they just can't make a profit. And the real question to the money managers, why aren't the money managers making a profit? They might be holding investments, marking them to market, holding them. And as the market falls, their investments fall. As their investments fall, their income goes negative. And so I bring this up because it almost doesn't matter what company you buy. Now, if you stayed with me this long, God bless you, and you should see. Prax, I think they're the air company, Gato, ADN, Cano. These are companies that our model really thinks that you should hold if you want to lose money. These are the companies that you should not hold. They're the crap companies. You should avoid them like the plague. Praxis Precision Medicines, Advent Technologies, Gato Silver, F45 Training, Invivid, Telos, Cano Health, Bed Bath & Beyond. Desktop Metal, I actually didn't mind their financials. I looked at them. I stopped shorting them because of that. They lose money because of a write-off. They're not a bad, it's not bad. It's not bad, that one. Azure Power, Bohr Drilling, Wave Life Science, Nakarta, Black Sky Technologies, Liquidia, Tupperware, Vertex Energy, AMC. So these are the companies that are really rough. You don't really want to be hanging on to them. And there's a couple biotechs. We didn't get all the biotechs out. But the other ones I listed are money losers as well. So if you take all the money losers as a group, their price risk is 78 ticks, or 7.8 times 10 to the negative 4. It's a high volatility when you compare it to the S&P 500, which is optimized and beautiful, market cap weighted, whereas mine was even cap weighted, 2.3 times 10 to the negative 4. So why would you hold 7.8 times 10 to the negative 4 versus 2.3 times 10 to the negative 4? Well, the answer is obvious. Either you don't know better, which is fine, or you're holding like 1 or 2 stocks in your portfolio just to taste that lottery ticket, that risk, because you're betting on a turnaround. You're betting on them to stop losing money or to have some great discovery and really make a run for it, right? Those are usually smaller companies, like the tech companies. The real question is, why are you investing in a large company that loses money and that has a high risk? So why would you hold GE or Boeing or Baxter or Dun & Bradstreet or Warner Brothers Discovery, United Airlines, SABR, Xerox, JetBlue, Carnival Cruise Lines? These are established firms that just lose money. I don't know why you hold them. Maybe you're just dreaming big. Maybe you think they're going to turn around. Because if they do turn around and they start making a profit, it's going to be great. But turnaround stories require a lot of fundamental analysis. And I'm not sure as a listener you have the time. I don't really have the time anymore. I'm busy managing money, right? But I look at these and I think, let's just make sure maybe I don't have these in my portfolio. That these are maybe some stocks to avoid, maybe some stocks to look into. Not that I want to short them, because I really don't. I have a distaste for betting against the success of large American companies. But honestly, they might just be so poorly managed. And then on top of that, they have debt that's now trading much more expensively. They're done. So I want to thank you for watching. It's kind of an interesting run here. I showed you a bunch of stocks that lose money. And it gave you kind of the tail of the tape on what the problem is. They have a lot more risk, three times the risk. More than 3. 3.4 times the risk of the S&P 500 index. It's awful. So that's why we run the down run. And then we give you the worst of the worst. And we give you the worst stocks in the down run. The ones that have the most price movement with the least amount of beta, least amount of motion. We show you stocks like F45 Training Holdings. Now here's the deal. If you were to short a handful of these stocks on a repeated basis every day, what we found when we ran our tests was the model does very well. You do very well. When in a down market, in a bear market, you bet against money-losing stocks that are very high in volatility. And so that's it. I just want to tell you one more thing. This is the advertising portion. So if you don't want to hear the ad, you can hang up now. It's fine. But I feel like I owe it to you to tell you. For a limited time only, we have lowered the price of our analysis of our runs, of our up and down runs, to $100. They're $750. They take a really long time to run. They're expensive to run. I heat my house with the servers, okay? But $100 because I want people to see it. I want you to buy it. I want you to see the long analysis. I want you to buy it. I want you to see the short analysis. I want you to get a copy of the dog shit stocks that we find. And there's so many screens that we provide you. This is all money losers. Did the stock split? Did it have a volume spike? Did it have a large price change? Does it have a high or low beta or a negative beta? What are the expected returns of every one of those stocks? What's the variance of that stock compared to all the others? Did it pay a dividend? How much? By the way, is it a normal distribution stock? Or does it have a third order price distribution skew? Or does it have a fourth order price distribution that's non-normal called kurtosis? You tell me. I find that stuff very interesting. Beta. What's the beta? What's the price change versus the average price? What's the volume that it traded yesterday, or in this case Friday, versus its own average volume? And then what is your Chicago Quantum Net Score, proprietary score for each stock? And what are the variances? Oh, that's here too. I wrote that twice. That's okay though. We start the run at around 7 p.m. Eastern, and we get it to you before market opens. $100. Now it's funny because it's $750. We're giving it to you for $100. You would have this entire list of money-losing companies. You would know a lot about them at a quick view. And we even send you a spreadsheet in addition with all the stocks and a whole bunch of info. So you get all this info. Why wouldn't you want that? If you're trading like a couple $1,000,000, you want this info. Now, you might get it from your own trading people. You might have a trading desk somewhere that's going to send you this. Maybe you get a newsletter. Every morning you get a newsletter of the hot list of stocks to buy and the hot list of stocks to sell, but they may not give you all the data. Or you might like to see all the data at one time, and it might just kind of wash over you that airlines aren't doing very well right now, despite the news that all the planes are full. Okay, it's interesting. And heavy manufacturers are having some issues. Not all of them, just some, but yeah. You start to see trends, the tech firms starting to lose money. It's nice. So that's $100. Now we're going on vacation, and so we'll not be able to run this for about a week before Christmas. And so, but we're here all the time. We run it for ourselves, right? It's how we manage our own money. And we can also help manage yours. But that's not the topic for today. Today, it's $100. We'll run you the up run. We'll give you the up picks. We'll give you the down run. Now, the up run was interesting because we ran the up run. And wow, did it give us some cool portfolios to buy and sell. Yeah. What I will show you is this. I'll show you the volatility of all the stocks. It's 2.5 times 10 to the negative 4. That is starting to come down. The all stock variance is starting to drop. So when variance drops, expected returns, you know, the reality is expected returns go down. because the prices of the stocks are going up. So when volatility goes down, you tend to have an appreciation in risk assets. And that's nice. So I want to thank you very much for watching. If you like the video, if you like the list, go ahead and hit the subscribe button, maybe drop a comment, and have a great day. Thanks so much. Bye-bye.